Can you clarify as to kind of why you hate VA loans so much?
Hate might be a strong term, but VA loans are more expensive with fees and interest rate than any of the big three, FHA, VA, or conventional.
Dave Ramsey is one of the biggest financial gurus there is, and he seems to think that FHA loans are better for veterans than VA loans. So in this video, I'm going to do a side-by-side comparison showing you homes in the cities that you guys have picked and see which monthly payment is actually going to be better. Before I jump into the video, over 88% of you guys that have been watching our videos are not subscribed. So if you are getting value out of the content that we are creating, do me a huge favor, hit the like button down below and also subscribe and join the community. This lets YouTube know that this information is valuable and will allow it to be shared to more veterans just like you who need to know this information. So as you can see on my screen here, I have our first property up, and this first property is going to be in St. Louis, Missouri, which is again a property that you guys picked. If you want me to do more property breakdowns like this to give you guys an idea of roughly monthly payments in your area, all you got to do is comment below and let me know the city and state that you're in, and I will do my best to try to give you guys more monthly breakdowns in places that you guys want to see. But again, this first place is going to be in St. Louis, Missouri. When I did my research, I saw it listed at about 190 to maybe 200,000 on the higher side for the median sales price in the St. Louis area. But I wanted to get a property that's a little bit newer and more modern based on what other homes were available. So on my right side of my screen, you're going to also see my FHA loan calculator, and you're also going to see my VA loan calculator. Now, what I'm going to do for you guys really quickly is we're going to do a quick search for interest rates to see how the market is looking as of right now. So on FHA loans, the interest rate in terms of national average as of February 27th at the time of recording this video for FHA loans is 6.7. So we're going to go ahead and enter in 6.7 right there. Now, when we do the same thing to look and see what VA rates are looking like in terms of national average, it's 6.72. So it's pretty much, I would say pretty much the same rate, but I'll enter in the exact number just so that way I am not being biased, right? The next thing we're going to do is we're going to go over here and we're going to start entering in the details for each of these properties to see what it would come out to for our monthly payment. So on FHA, we're doing $259,900. 3.5% down, which is FHA's requirement. We're doing a 30-year fix. We got our rate. FHA has what's called an upfront mortgage insurance premium, which is 1.75%. This gets rolled into your total loan amount. It's not something that you pay that you necessarily pay upfront at closing. You can do that on FHA loans, but it's typically rolled into the loan. It's not something people usually will pay upfront. And then the next one you'll see is the annual FHA mortgage insurance premium. And this is something that is factored into your monthly payment. So it's 0.55%. Then what we're going to need to do is we're going to need to add in our property taxes and our homeowners insurance. So for this property, it is saying property taxes are right at $336 per month. So I'm going to do 336 and I'm going to multiply that by 12 for $4,032. So we got $4,032, and then we need to add in our homeowners insurance, multiply that by 12 as well, and that is going to be $22.92. This property does not have an HOA, and we're done with the FHA side. Now we're going to jump over to the VA side. I'm going to transfer over the information that is the same, which obviously would be our purchase price. We're going to scroll down. I'm going to show it. It doesn't really make any difference regardless of which one that you are here. Well, the only difference, sorry, would be on a surviving spouse, because you would be exempt from the VA funding fee. But I'm just going to pick active duty here, which means you are going to have a funding fee on this loan. And this is going to be treating it more of a worst case scenario. So again, I do not want to play any favoritism towards the VA side. I want to be very, very on the conservative side. So I'm going to transfer over our property taxes, our homeowners insurance, no HOA, and we are done here. The next thing we need to do is we just need to hit calculate. So we're going to hit calculate there, and we're going to hit calculate there. Now, as you guys can see, we're seeing our principal and interest payment in the green bar, principal and interest only. So technically, if you're basing it only on principal and interest, the monthly payment is less on the FHA side than it is on the VA side. But there's also other payments that go into this. So we have property taxes that we're going to add in on both sides. We have homeowners insurance we're going to add on both sides. But if you notice, there's one more extra thing that's on this side, and that is annual mortgage insurance premium. So that makes our total monthly payment on an FHA loan at $2,289.68. So let's look at the VA side, $2,243.66. So $2,243.66. That's a $46 difference. So on the loan that Dave is saying that you should do, which is the FHA loan, because you're putting 3.5% down, he's saying it is better than a VA loan because of how much more you're going to be paying. This is going off of solely what Dave is saying here. So I don't know about you guys, but the numbers don't lie. Clearly, as you can see, the loan that actually has the lesser down payment than the other side is actually cheaper every single month, which means the veteran would still have $9,000 in the bank. Now, if you guys watched my other video that I did on breaking down conventional loans, I showed you guys how much or how large of a down payment you would actually need to do in order for a conventional loan to be better than a VA loan. So in his argument, he did say that FHA and conventional is better. Well, so far, his argument is actually false. Now, let's go and break down another property in another area, and let's see what that monthly payment will look like. Before we jump to our next monthly payment breakdown, if you're getting value from this video, do me a huge favor and hit the like button down below, and also consider subscribing and joining the community. We have been able to grow this channel in a short amount of time to well over 1,000 subscribers now. And our goal is to double that by getting it to 2,000 subscribers in a significantly faster time frame. And the only way we're going to do that is, one, by us providing you guys with the valuable content that you deserve, and two, you guys supporting us on this journey by subscribing and liking our videos, and also telling us exactly what it is that you guys want us to create more content about. I thank you guys for all the support so far, and I look forward to continuing to adding value to you for time to come. So our next property comes to us from Columbus, Georgia. This was another place that you guys had requested that we do a monthly payment breakdown on. And on this one, I did already enter in the information regarding the property taxes, homeowners insurance, and this property was also in an HOA, so I did enter in that as well, just for the sake of your guys' time. So as you can see, this property is listed at $300,000, and this property also has an HOA of $250 a month. Now, HOA payments do vary depending on where you are buying. I've lived in places where HOA payments are significantly less than this, and I've also lived in places where HOA payments are significantly higher. It just really depends on what is common to the area in which you are buying in. So just keep that in mind when looking at property, because that is obviously a monthly expense that you will have to account. And some people do miss this when they do run their own analysis, and they miss out on possibly a property that could actually cost them a lot more because they did not actually notice that HOA payment. So when scrolling down, as you can see, our property tax is at $293, HOA $250, homeowners insurance at $155. So the only thing to do here now is just hit calculate for both of these payments, and this brings our principal and interest payment for FHA at $1901.96 and our principal and interest payment for VA at $1981.52. So obviously, as you can see here, roughly, let's just call it $80, is it's about $80 more for just principal and interest on the VA loan than it is on the FHA loan. But as we did on the first property, when you go down, and let's just skip past the property taxes and insurance because it's going to be the same for both, also skipping past the HOA, and we get right here to this number right there, annual mortgage insurance premium, $132 a month. This brings our total monthly payment on FHA to $2,732.64. It brings it for VA to $2,679.52. So obviously, when you're doing an FHA loan versus doing a VA loan on a property in Columbus, Georgia, just like when we did on the property over in St. Louis, the monthly payment is higher on the FHA loan, even with that down payment. So let's jump over to another one. I have one more city and state that I'm going to show you guys a monthly payment on. Before I jump into our next monthly payment breakdown, I wanted to talk a little bit more about some of the differences between a VA loan and an FHA loan when it comes to the requirements. When it comes to credit score, both of them have similar requirements when it comes to this number. Now, on an FHA loan, the credit score requirement is 580. But if you've been watching my channel for more than a day, you've probably heard me mention how the VA loan actually does not have a credit score requirement at all. But when it comes to the VA loan, it's the VA that only guarantees the loan. Lenders are who do the loan. So lenders are going to have what's called overlays and rules on top of the VA loan that are going to be required for you to meet in order for you to work with them. Most or many lenders out there require about a 620 credit score, and there are some that will allow you to go as low as 580. And you've also probably heard me mention how lenders like myself can even accept credit scores at below the 580 threshold through what's called a manual underwrite. Now, I'm not going to go into that in this video. If you want to check that out, I will link that up at top, and you guys can go ahead and check out how to qualify for a VA loan if you don't have the best credit. But essentially, they have similar credit score requirements in regards to the number itself. Now, the other thing that you need to keep in mind of is going to be debt to income ratio. The VA loan does not have a debt to income ratio associated with it. VA uses a thing called residual income to determine what you would qualify for. So that means I've seen veterans qualify with a VA loan at well above 60 to 65 and even at 70% on a VA loan. FHA though, you're going to need to be at 57% or less in order for you to qualify. Now, let's talk about down payment. Well, you've seen my monthly payment breakdown so far, and you saw that the down payment requirement was 3.5%, but the VA does not have a down payment requirement. So essentially, the FHA loan is also going to require you to bring in some money up front in order for you to qualify for it. And then the next thing is going to be private mortgage insurance. As you saw, private mortgage insurance on FHA loans is 0.55%. This can be over $100, $150+ added onto your monthly payment when purchasing a property with an FHA loan, where on a VA loan, you do not have private mortgage insurance. And then the last difference, or the last thing regarding these two loans, is going to be the upfront cost. On an FHA loan, they use a thing called upfront mortgage insurance premium, and this is 1.75%, where on a VA loan, they use a thing called funding fee. And the funding fee can vary depending on your status, but if you're using your VA loan for the first time at zero down, the funding fee is 2.15%, so slightly higher on the VA loan route. These are the biggest differences between these two loans. I just wanted to give you guys some context so that way you guys knew exactly what to expect with regards to the differences between the two of them, so you know how to analyze these monthly payments better. And our last property is coming to us from Punta Gorda, Florida. I hope I said that right. Anyways, I already did enter in our monthly payment details for the calculators over here. I just have not hit calculate just yet. But as you can see, this property is listed at $377,000. This one's the highest of the three thus far. And that's because when I did look up the median sales price in that area, it was ranging actually from about 370 to even in some places it was saying it was over a little bit over 400,000. So I wanted to get something as close to that number as I could, and that's how we came up with this property here. Now, when we go down again, this property is also in an HOA. Now, the HOA is much less than our property that we used over in Columbus. It's $10 a month, so significantly less, but this HOA amount may be common to the area, again, like we talked about before. So make sure you're keeping that in mind when doing this. When we go down, you'll see our property tax at $283 a month, HOA at $10 as we mentioned, and homeowners insurance at $251 per month. Now let's go ahead and hit calculate for these two guys here and get our numbers and see what these come out to. So our monthly payment differences are going to be pretty much consistent with both the other areas we used. So as you can see, principal and interest is less by $100 on this one, so $23.90 and $24.90. Now when you go to our annual mortgage insurance premium, which is really the only difference between these two, is that's $166 a month. If you look at the difference between our monthly payments, that's about $65, right? So about $65 per month in difference on an FHA loan versus on a VA loan. As you can see, the VA loan has basically won out on all three scenarios, which is what I expected, but this is essentially what you would expect on a VA loan or FHA loan on a property in Punta Gorda, Florida. So there you have it, guys. The numbers don't lie. An FHA loan's monthly payment is more than a VA loan, and you're going to have a down payment that you're bringing in up front, making the VA loan win out by a landslide for veterans who are looking to purchase a property. If you want me to do more monthly payment breakdowns like this, comment below the city and state that you are in, and I will do my best to provide you guys with an honest and unbiased opinion on what the monthly payment would be looking like in today's current market. I thank you guys for watching the video so far. The last thing I want you guys to remember is Jesus loved you and he paid a price for your life. And I also want you guys to know that I appreciate the love and support that you have continued to show this channel so far. If you want to learn more information about the VA home loan benefit, check out this playlist right here.